In terms of where we're seeing the gold price, we're sitting at just above $1,490 an ounce. We were a breath away from $1,500 an ounce. Is this all got to do with what we're seeing on the euro-dollar cross, or is it just negative sentiment with regards to US debt and the downgrading of its outlook by S&P?
Yeah, it's been a string of positive factors have been driving this gold price higher over the past week. It's been inflationary concerns, high international commodity prices have simply fueled inflation across the globe, and that has fueled demand for gold as an inflation hedge. We have seen the S&P downgrade, so it's safe haven buying. The weaker dollar has simply supported gold higher. There's just
a concoction.
Exactly,
for
it's a string of factors, and it's just supporting gold to the upside.
And it's also fascinating to see platinum prices below $1,800 an ounce, and it seems that we're just seeing that safe haven play filtering through into the gold price.
Yes,
so
exactly.
Definitely safe haven buying.
Safe haven into the gold. So that we're likely to see that gold price going above that 1,500 over the coming days, as if we see persistent, if weaker dollar inflation concerns just simply go on, we are likely to see it go above that $1,500 an ounce level.
And as the technical graphs tell us, that we could actually see a $60 movement to the upside. So that's sort of imminent, it seems.
Now I'm also in that camp where we're likely to see gold just going, testing the highs on going the upside.
Well, with regards to the euro-dollar cross, and we were talking about it being in correction phase at this point, and we know it hit 145. We've got Europe with its own set of worries as well. To what extent can we find a correlation between the gold movements and the euro-dollar movements at this point?
No, what's interesting is if we look at the correlations historically, gold has become increasingly correlated to the dollar, and especially this year, gold is even more sensitive to its, even compared to its long-term sensitivities, gold is even more sensitive to the dollar this year. So definitely the dollar playing a key role in the gold, so that correlation not breaking down, and so any movements in the dollar will definitely just push the gold price even further. If we see further dollar strength, further dollar weakness will definitely support gold to the upside. Our view is for gold to average around $1,450 an ounce this year, and so based on, but definitely towards the end of the year we're seeing slightly stronger dollar, which will cap some of that upside.
It's also fascinating that yes, platinum is coming under slight pressure, but silver seems to have taken platinum's place in a sense, because it's also got that industrial element. It's far cheaper than gold, and it's up 40% so far this year against gold's 5% rise or so, and then the gold to silver ratio is slipping to a 28-year low below 35. What can we read into this story?
But what's interesting about the platinum side, we have to take into consideration the whole what happened in Japan. Yes. With Japan being a large producer and a large consumer of platinum, so that with the closure of a number of plants and transport plants in that country, that has definitely weighed on platinum demand, and that has played a key role in that sharp retracement that we saw in March on platinum to the downside.
With regards to the oil price, and some say that it was quite sneaky of OPEC to cut production by 800,000 barrels per day in March, and pretty much during the height of the Libyan crisis, where we saw some supply constraints, talking about demand destruction because of all the higher oil price and concerns about demand on a global level as well. Is this deja vu to 2008?
What's interesting, it's difficult to find it's a whole different story this time around. I feel like we for the most part of the year, the oil price was driven by supply concerns, supply, and then suddenly we've seen the market switching away from the supply side. Now we're looking on the demand side factors. We see the IEA coming in, International Energy Agency coming out, and the IMF coming out concerned, and that they're both concerned about the high oil price and how that may impact global growth, and how that may essentially impact global demand for oil. So the focus is definitely back on demand factors and how that may impact, and we're likely to see a slowdown in demand the second half of the year if this high oil prices just continue to go to the upside. But and I think one thing to note is that if we continue to, for as long as issues out of the Middle East and North Africa continue, we should see that oil price maintained at around $150, support at around $150.
So did you get that point OPEC should actually come in and increase supply to counteract some of the speculative moves?
I guess the issue is, is there enough supply? Do they have the capacity to increase that production? And that is definitely something that to look into. If are they just limiting supplies because they don't have enough, or what is the real capacity for OPEC members?
Fantastic.